Good afternoon this Thursday, January 6th. Volatility in the grain trade, volatility in the cattle trade, sharply lower again today. We'll get to them in a bit. First, on the grain trade, the overnight strength was hit with selling early in the day just to see wheat turn around and lead the advance to the upside, pulling the grain trade back higher in the day. A lot of comments today. Early this morning, what sent the grain trade lower was China crying that they're going to go to the WTO over the tariffs that were applied to them on Tuesday and complain and take it to court. Then during the day session, Jamieson Greer, who is President Trump's appointment to be our trade advisor, he was speaking before the Senate Finance Committee, and he stated, the thing about China is we have a signed deal called Phase 1 that they have reneged upon right now. And so they intend to force them to actually honor what they have done on Phase 1, which means their complaints to WTO are irrelevant because we have a piece of paper that says they'll buy. That caused the grain trade to turn higher, but more importantly, wheat moved even higher on the session by 15 to 16 cents as cold temperatures look to descend on the Russian winter wheat crop, which for all intents and purposes went through some warm weather now, and it's going to get really cold. So let's get to all these matters, but first, let's start with the cattle. Cattle trade breaking sharply lower again today. You heard the story on some dairy cows in Nevada found with a new strain of the avian flu, sent the market with fear like we had last year when the market fell out of bed in July. But here's the thing about it. Whether it's avian flu, a new strain, or old strain, it's kind of like apples. You have green apples, you have red apples, but they're still apples. So I think we'll see this thing play out the same. It's probably already in the market. Notice the support near the prior wave 4 here that we hit. More importantly, if you look at April live cattle and draw a trend line off the last August lows with the last major hit, it went right to it today and turned up. So I believe after making 5 waves down now in an A, you've got a 1, 2, 3, 4, 5. This is wave A. And now we're going to do some kind of wave B, likely into the box before a wave C finishes out on a wave 4. Now, just to kind of let you see these prices, looks like we could probably get a bounce into this 202 to 205 possible area for wave B and then break to a wave 4. Wave 4 should hold above the top of wave 1. I can't draw a straight line. But basically, the 189 to 190 range should be support. We had talked about this last October, November. We had found this resistance on the continuation charts, and it just kept hitting it until finally going through, and then we targeted 206 to 207 as our upside. Hit a little over 208 before coming off now. On the present decline, I know many are thinking the cash market's so hot out there, there's no way it's coming. If it goes up, it ain't going back down. Yeah, well, you never saw this break in the first place. The point is February, something about February, black swan season, like we said last weekend, just seems to be negative. And once you get this breaks going, they don't like the bottom until the end of February or the first part of March. So theoretically, we could see wave 4 take that long and then possibly turn up. But then again, June and August are not known for very bullish times of the year for cattle because the numbers just naturally pick up. Maybe it's the October-December contract that put in our 5th wave. Maybe that's what this is. Remember, 4th wave, this chart, this is the continuation chart. This does not necessarily designate time. Maybe we get a B wave rally into the April contract expiration, then June takes over, comes on, does our 4th wave, we move this way over in the future, we get our 4th wave down to the 189, 190 range, and then ultimately go up into the winter contracts, December 25, does our wave 5 high, or February, and that's in that measured 217, 220 price range probability. So I hope this makes sense to you when I draw this out on a timeline. Now let's go feeder cattle. Feeder cattle breaking again hard today. 1, 2, 3, 4, 5 waves down. You can see wave A likely today, maybe a little more in the morning. Yesterday we had hit this trend line, which coincided with our original resistance at 268 that we had brought up a long time ago that would be a problem, and it was. And then when it went through, we said we'd go to 276. Well, they went to 79 something before coming off. Well, the point is you can see it could have held and fired out of here, but it chose not to. It went deeper. So now, since I do believe this is A, B, well, since we are quite deep versus cattle, B can be shallow to 271.85 or could be as strong till near the 78% retracement. But like I had said in this morning's commentary, Monday's high of 276.75 is going to be a key number. Probably more importantly, Friday's bump over 77. So I would project that the B wave will start somewhere as high as this and then work lower in a fourth wave where it'll ultimately bottom out and then move on higher to new price highs later on, maybe in the new crop, maybe in the August, or maybe grass turnout for the May contract. But for now, I do think we kind of played the worst of it on the short term, and we'll get a bounce and then one more final break. Now, the thing about the fourth wave, it does not necessarily have to be much lower than the A, because in a bull market, your C will be shallower than your A decline, can be shallower. So we'll see. Moving on to the grains, we're going to start with wheat. This is the cold temperatures anticipated in Russia around Monday, February 17th. I'll help highlight. This is Ukraine, okay? Here's where a lot of the winter wheat is planted. And you're going to see temperatures, these are Celsius. So 18, 19 below Celsius, that's like 2 degrees below zero. 10 below Celsius. I mean, this is like 7 above, 8 above. Stuff is going to be definitely threatened, and there's no snow cover in this area. So this is what the worry is on the wheat and why she popped higher today. In the U.S., hard red winter wheat's going to probably get some snow cover ahead of the cold temperatures they're going to get next week. So nonetheless, yesterday we stalled at the 786, fell out of bed, and came charging back higher today with an outside day higher. Outside day higher is today's high is higher than yesterday's high. Today's low is lower than yesterday's low, and we closed above yesterday's high. Maybe I should have said that the other way around. Lower low, higher high, higher close than the previous day. There, maybe you can understand that. That's a signal of further strength. Now, further strength, if we want to measure, obviously this market hates taking out previous highs, so 623 is going to be a problem for July, Kansas City. We can do some measurements. You measure the first leg up, and just minimum expectations is for that second leg to at least match the first leg. Extensions are very likely, but at least minimum expectation is something like 627 that we could get up to before we go into a massive correction again. But the funds are definitely working on reducing this massive short position they laid into the wheat trade while they turned the corn around and covered their bean short. Now wheat is the only one left in the soybean meal. Chicago wheat, same thing can be said. Massive lows made last fall, and all it could do is just come back down and bang on it. Well, we have another outside day up here as well on the Chicago wheat, Minneapolis as well. And now if we want to do the same kind of measuring tokens, I had this here. You can see this measurement. Well, if we move that over, this implies something near 630. I've written about 630 numerous times over the past few months. Once we had seen these basing actions, I talked about 630 when we were here. I talked about 630 when we were here. So the point is something is in the works here. Outside day is sending us a signal. Something's up. Pay attention. Don't be so bearish, right? Like everybody else out there wants to be. Corn broke lower as well today. I thought we'd probably make it to the green line, the 20-day moving average, 4-wave 2. That would have been in the lower 480 range. Got down to something like 86, I think was the low today, and turned up into the close. Now, today's close is the second highest close for corn. So, it could be an A, B, C yet down, but if we close Friday higher than this, odds favor this was 2, and with the wheat trade doing what it's doing, it's going to help power us into a wave 3. Or maybe it could be that China is being told, you start doing phase 1 buying, and if you don't, there's hell to pay, as we are in the right. Well, China loves buying U.S. corn in February and March. Maybe they'll do that. And maybe that's what's going to give us our 3, 4, and then ultimately 5, which could come, I can't draw here. This gives us a 3, 4, and then a 5 either in the beginning of April or into the beginning of May, because that's typically when we make our second quarter highs, as is tied to the Safrina corn crop and the Argentine corn crop, their pollination troubles. That could be a problem. And then we haven't talked about if our corn crop is 94 million acres or not. Are we going to have a weather problem? But for now, this is how the count looks. Another surge could be upon us in the corn market. Now look at new crop December corn. Breaking above long-term downtrend resistance and now taking a run at another one near 478. Where do these trend lines come from? Let's go way back in time. Go back to 2022. This lower one, which has always been held to pay, we had just finally climbed above. Now the recent one is tied to the October 23 high with the May 24 high. This would target an opportunity near 476 on new crop corn. We would probably make another sale on that contract. We made a March corn sale around 472. Now as this thing keeps climbing, we'll do a December sale, and the rest of the sales, if we get strength, will be with short-dated put options. That's short-dated new crop put options. On the beans, okay, something interesting here. We've got to pay attention. Theoretically, the Trump traders might be getting it right. This could have been a wave 2 starting wave 3 down, but the reversal could be a warning shot here because today we closed back above the 100-day moving average. Now, we've done it once before here, and we closed at it back here, but here's what's significant. This was a Monday. This was a Tuesday. Tomorrow is a Friday close. If we close higher tomorrow on the daily continuation chart, say we're above 1461 and 3/4, 1462, this is the first time in well over a year we're above the 200-day moving average. Something's up, Jack. And that count I just showed you on the March bean chart, we throw that away, and we're back to ABC, fourth wave, still in play. And this was a 1, 2, 3, 4, 5, ABC down. And now we could be doing a 1, 2, just like corn, and in a 3 pop, 4, 5. Something like that could set us up. And this also is prevalent on November beans. I can take you back in time. 200-day moving average. Here we are, back up against 200-day moving average. We start getting above this tomorrow or even on Monday, something's in the works. Now, maybe it has nothing to do with South American weather. Probably has everything to do with China being forced to buy U.S. beans. Love it or not, you got to pay more because if you want to sell to the U.S., you got to buy from the U.S. So there you go. Something to bear in mind with the Trump traders also negative on South American weather, total production, and all this tariff thing. It could be Trump's already got the war won and people don't even know it, and that China will come around since they're too weak to fight right now. They need to sell into our country. So they got to pay up 60 to 80 cents a bushel for U.S. beans for another maybe 5 to 10 million metric tons. Who cares in the grand scheme of things? It's chicken feed. So we'll see. This is Eugene Grainer with Heartland Investor Capital Management.